We will kick off. Okay, cool. Alex, thank you so much for being here today. Really appreciate your time. I know you're a busy person and are looking at a lot of different things each day. So thanks so much for making the time with us today. Do you want to just quickly introduce yourself, what your role is at Virescent, and then I guess more broadly what Virescent does in the sort of wider ecosystem?
Yeah, happy to. Great. Thank you for having me, Alex. And thanks everyone for joining. It seems like a terrific turnout. So by way of introduction, I'm an investment director in the team at Virescent Ventures. I'm based in our Melbourne office. And I guess I've been investing in early stage businesses for close to 10 years now. Virescent Ventures, some of you might know us, others not. So just to give a quick intro, so we're actually Australia's largest dedicated climate technology investor. So we're a venture capital firm that invests in both combination of hardware and software, deep technology, as well as more sort of execution or business model innovation type plays. All of which, the commonality between all of our investments is that they are contributing to a meaningful decarbonisation of the Australian economy as well as the global economy in many cases. We've made 38 investments. We've got about $500 million under management. And pleasingly, we've actually just started investing from Fund 2. So we recently, towards the end of last year, raised our second fund, which is sitting at $125 million. So we're kind of actively out there looking for great startups to invest in.
Awesome, Alex. Yeah, really appreciate that sort of breakdown of who Virescent is and what Virescent does. Keen to better understand, you talk about breakthrough technologies, what Virescent, invests in. Zooming out with the wider sort of VC investing landscape in Australia, where does Virescent sit in amongst, other funders? And I guess more directly, what I'm trying to ask here is like, who funds what and at what stage, and who are the sort of key players that we should be aware of, other than Virescent in the landscape?
Yeah, excellent. No, it's a great question, Alex. And I think, look, the reality is that Virescent, as well as many others, actually invests across quite a broad range of sort of maturities of technology. So maybe I'll give you just two examples to perhaps illustrate the bookends in our portfolio, and then I can talk a bit more broadly about the Australian VC landscape and who sort of fits in where. But so high-level answer to your question, we typically invest first at the seed to Series A stage, and sometimes we make our first investment at the Series B stage. To give you a couple of examples, so one of our most recent investments is in a business called OptiGrid, and that's at the very early stage example, whereby it's an AI machine learning software bidding tool that is basically used to tell large battery storage projects whether they should be selling their power into the market at any given time or filling up the battery. And so it basically helps to improve the return on investment on those assets. And that was a spin out from Adelaide University, very early stage. We met them at University of New South Wales Founders 10X program, which we've been a sponsor of for the last couple of years. And that's at the really early stage. At the later stage, we're also in investment in a business called Sunman, which is making lightweight, flexible solar panels. And we first invested in their business at the Series B stage. So they were doing about $10 million of revenue, roughly. It was a business that had actually been founded by an alumni of the University of New South Wales, Dr. Zhenrong Shi, who had a very successful business previously. I think he was perhaps the first green billionaire, in fact, sort of known as the Sun King. His business had listed on the NASDAQ, and this was his second business. When we first invested, as I said, it was doing about $10 million revenue. It then quickly accelerated to over 100 million revenue, and that's in US dollars as well. So, just gives you an idea from a technology that's just been sort of a model that's just been spun out of a university and is kind of pre-revenue through to something that might have sort of, say, $10 million when we first invest. In terms of giving a bit of a summary, and I'll focus a summary of the VC landscape in Australia. I'll focus more on the equity side, but touch briefly on the debt side. So there are kind of 3 or 4 different buckets of investors. So you've got your pre-seed investors, and they are typically investors that will invest in some cases pre-product. But often pre-revenue. So typically if founders are looking to raise somewhere between $50,000 and $250,000. The common network are the 3 Fs, the friends, family, and fools. So that's a bit pejorative, but it's people close to the founder. It's also angel networks. So there's some great angel networks out there. Folks like Electrify Ventures really comes to mind. And in some instances, family offices, particularly where that founder has the connection with the family office, that personal connection. Because really at that stage, typically they're just backing the founder. There's not much else around it. The next stage of funding is seed funding. So that's really that first funding that's outside of the company or the founder's circle. And sometimes, typically at that stage, there will be an established company, so not just an idea, and they're selling that product or service into a small but growing customer base. So in Australia, we've got some fantastic seed investors. The ones that probably come to mind are Investable, Tenacious, more in the ag space, Artesian, they have a climate fund, Mandalay, based up in Brisbane. There's a bunch of them, and excuse me if I've forgotten anyone, because it's not possible to cover them all. In fact, if you do want to do any more research, there's Climate Salad actually has a great resource which lists all the different climate tech investors in Australia, so that's a good starting point. Another thing just to touch on while I'm talking about the seed investors is that, like Virescent, we probably kind of naturally gravitate a bit more towards Series A, but many investors like us will invest at the seed stage if it's a compelling proposition. And it's also not an exact science whether a company is seed or Series A. It can mean sort of different things in different contexts. So, for instance, a deep tech hardware play might be doing a big Series B, but still be a couple of years from having a commercial revenues. Whereas let's say an AI software play could be at Series A and have already millions of dollars of revenue. So it's a little bit of a blurred kind of distinction. Then moving on, the Series A investors in Australia, they're the ones that are going to really be looking for demonstrated revenue traction, product market fit, typically more than $1 million worth of recurring revenue. So Virescent's obviously in that space, although we do go earlier and we can go later. There are other sort of specialist venture type investors that will kind of invest in that space. I'm thinking folks like Kalara Capital, for instance, as well as the generalists. So folks like Main Sequence, IP Group, and even Blackbird and the other big generalist venture firms. And then finally, you've got your sort of later stage or your growth investors, and they're typically investing in businesses that are either profitable or that have a really clear pathway to getting to profitability. So they might be a matter of months away or a few orders away. That's folks like Wallamai as well as Adamantum. In addition, you typically see offshore investors kind of investing at that bit of a later stage, as well as strategic. So the big incumbents in the industry are often investing in the startups coming through the ranks, but they might invest at that later stage. And finally, just in terms of rounding out the funding landscape, you've got debt. So there's venture debt. There's folks out there like Tractor Ventures or One Ventures, which have venture debt funds. You've got then the National Reconstruction Fund, which does bigger tickets. So that I think they're typically looking to fund $10 million and over. And you've got folks like Wallamai, which are interested in doing sort of stapled debt and equity. So they're looking at sort of businesses that can take that type of funding. So I might just pause there. Any questions you've got or the crowd's got?
I think that's a super comprehensive overview. So thanks so much for sharing that, Alex.
No worries.
And I'll try and follow up with links with some of the VCs that you've mentioned. And also keen to meet the Sun King someday, if possible.
He was in Melbourne actually for the Climate Investor Forum. So he did one of the keynotes, and just super impressive. I mean, his model for success was right person at the right place at the right time. But I came away just thinking he is always the right person at the right place at the right time, because he is a multiple time successful founder, incredible guy. Oh, you're on mute.
That's a perfect segue for my next question. Because I'm keen to get your understanding of like the state of the nation right now. Like, is Australia a great place for investment, for overseas investment? Obviously, the Sun King has come here to start his next business. Where would you say the state of play is for Australia in terms of investment in Australian sort of climate tech businesses and climate hardware businesses? Is it an attractive place for overseas investors to be investing right now? Do you think?
Look, the answer to that is absolutely yes. I mean, maybe I'll sort of split the question into two parts. I'll talk first about Australia and then perhaps about climate tech, or we can get on. Why don't I focus a bit on Australia and then we can talk about what's the general investor perception of climate at the moment. But Australia, I might just actually start with talking a bit more about Dr. Xi, because he's such a good illustration of why Australia is actually a really, great opportunity for climate tech investors. So when he was born in China and then came out to Australia to do his PhD at the University of New South Wales in their photovoltaics faculty under Professor Martin Green. And not a lot of people know this, but the University of New South Wales is actually one of the global leaders in photovoltaics, so solar panel technology, and has been had the record for the highest efficiency panels for something like 15 years. Like the alumni out of the University of New South Wales have actually gone on to found a lot of the major solar companies globally, like particularly in China. And anyhow, it's illustrative of the fact that we have fantastic research coming out of the universities, but we are generally pretty poor to commercialize it. So for instance, for Dr. Xi's first company, he was actually not able to raise that capital in Australia. So he went back to China with a relatively modest amount of funding from, I think it was the Chinese government entity that provided that first bit of funding for him, and went on to basically transform the solar industry and really help to position China as one of the global leaders. And we all know how dominant they are across all sorts of climate technologies today. But the opportunity that exists in Australia and investors like Virescent are trying to tap into it is that we actually do some terrific research out of our universities, but we are pretty poor at commercializing that. And part of that missing piece has been the access to funding. And we are in a much better funding environment for academics coming up with new technologies now than it was when Dr. Xi was coming out of the University of New South Wales. But that's one of the reasons why we think Australia is well positioned to win. There's a couple of other things. So we have one of the world's highest rates of rooftop solar penetration as well, which is fantastic. But it's a blessing and a curse, because it results in all sorts of challenges that are pretty well documented for our grid. We have the daily wholesale power price. It's almost zero, and in some cases it's negative in the middle of the day when nobody's using power but the sun is shining, and then the power becomes very expensive in the evenings and also in the mornings when people are kind of getting ready for work, or they're turning on their air conditioners. And so basically what this means is that Australia is really like the world leader in addressing these sorts of problems. So we see all these absolutely amazing technologies that are both incubated in Australia, as well as that come to Australia very early on in their commercialization journey, because it is such an attractive market to test one of these sorts of products. So that's another great example. We do have really favourable government policy settings at the moment as well in venture as well as in climate tech. So you've got R&D tax incentives, you've got the early stage venture capital limited partnership structures, which help to basically make venture capital more attractive for investors. You've got quite large government commitments to both the CEFC and ARENA and the Made in Australia, Future Made in Australia policy, all of which is really kind of strong tailwinds in Australia, and particularly given now that obviously with the new regime in America, there's kind of much less government support there. Australia's becoming a lot more attractive relative to other countries.
Yeah, awesome. Thanks for that second comprehensive breakdown, Alex. I really appreciate the level of detail you're sort of sharing in understanding the investing landscape. Something that's sort of come up in conversations for me a lot in talking with people like sort of either in VC or tangentially involved in fundraising is this notion of like the fundraising gap that exists in Australia, and the problem of the fundraising gap typically associated with like, you know, hardware and deep tech. Would you be able to like expand a little bit more on what that fundraising gap is, and perhaps even like think through it from the context of Virescent and how you conceptualize this gap that exists?
Yeah. Yeah. So the funding gap. Look, I guess maybe I might start with a bit of kind of myth busting in a way. So climate tech, the latest Cut Through Ventures report, the 2024 report, kind of came out a month or so ago, and that's a fantastic report if people are interested in kind of understanding what's going on in the space. But that basically, some of the kind of the key bits of data were that climate tech is actually number one, the kind of the category that achieved the number one most deals in Australia out of any other category. So more than fintech or AI, or all those sorts of things. So there were 55 Australian climate tech companies that raised capital in 2024. And the other important data point was that it was actually the second most funded sector in Australia after fintech. So there was roughly $600 million worth of funding that went into Australian climate tech businesses in 2024. And three of our portfolio companies actually raised a combined total of $350 million alone. So Hysata, which is making high efficiency hydrogen electrolyzers, raised $170 million. JetCharge, which does EV charging, it's the leading supplier of EV charging equipment in Australia, did a $72 million round. And Samsara, which has a novel plastic recycling technology, raised $100 million. So I guess like I would summarize it by just saying that for starters, like the large number of deals suggests that there is actually funding out there for the smaller kind of companies, and that's the earlier stage companies. And then the large dollar figure in terms of how much been invested does suggest to me that there's actually a fair bit of capital out there for the kind of for capital intensive businesses as well. So I would say that it's like, that it's certainly not all doom and gloom. I would say that the kind of climate tech is and the investors in that space are maturing, and that is a good thing. So like we're certainly no longer in the 2021-2022 boom period where interest rates were zero, capital was very easy to come by. I think investors in that period probably overemphasized impact and some of the more altruistic drivers. In 2025, I think it's much more about proving the commercial fundamentals of your business. The fact that you can compete with whatever the fossil fuel equivalent is, or that there's a really burning platform for customers. In terms of, I guess, the funding gaps, first of a kind. So that's typically that is where you're going, you've got a hardware device or you've got a hardware startup, which you might, the typical stages you might go through are a lab bench scale proof of concept. So very, small scale, you might be, say, whatever you're producing, you're doing it at you can't commercially sell the amount that you're producing, but it's enough to prove up that the chemistry in your platform works, for instance. But and then you go up to a sort of a kind of a working prototype, a sort of a pilot type project, which might cost in the sort of $5 to $10 million. Again, pretty easy to fund through venture capital. It's when you go to that full scale one, that's your real first of a kind. And depending on what it is, it might be tens to $100 million. And that is a tricky kind of period that is a tricky stage to fund, because it's big amounts of capital. It's pretty risky, and it's it's a challenging one to get that risk return balance right. The good news is that there are a few funders of that sort of thing in Australia, and I'm thinking particularly Ecotone Partners is raising a fund which I think is really focused around addressing that kind of issue. There are government sort of entities like Breakthrough Victoria, and even the National Reconstruction Fund. I've heard examples of where the deals that they're looking at or they're about to close, which would be that sort of first of a kind type funding, as well as overseas money. I think by the time you start to get into that quantum of capital, it's often you've caught the attention of overseas investors, and there certainly are funds from overseas that will invest in first of kind projects in Australia as well. So yeah, I would say there's the same gaps still persist, and I'd say that first of a kind is really probably the trickiest of those gaps.
Cool. Thanks, Alex. Really appreciate that. I recognise we're sort of like approaching 2:30. I was going to ask you to sort of maybe expand on, what opportunities you see popping up from some of the, organisations that you've invested in terms of roles that are like in demand. But I also might just sort of hand over to the crowd to see if there are any sort of burning questions before we get into that. Or maybe you can just begin to answer that and people can put up their hands if they've got a question. If that works for everyone. So yeah, feel free to just raise your hand if you've got a question.
Yeah, happy to do that. So I guess first thing I would say, we regularly post jobs from our portfolio on our LinkedIn. So that's the easiest way if you want to kind of follow what's coming up in our portfolio. And look, I would say it changes every week, to be honest. A lot, if I think about what the sort of the life cycle of our portfolio companies, typically the earlier stage ones are hiring sort of engineering talent, computer programmers, the more technical staff. And any sales that they're doing tend to be kind of more founder-led sales, and the marketing tends to be pretty kind of slow and quiet in those early days. It's not really about marketing. As they kind of then get, they've got a product to go and sell, then they'll typically be out there going and recruiting sales team to go out there, doing a bit of a marketing push, that sort of thing. And then as they kind of get to that later stage, they get to a point where you need some of the support systems around to make a larger organization run. That's things like an HR department, for instance, or it might be an in-house legal person, that sort of thing. So they're the kind of, I guess that like if I was to make a generalization around what sort of roles come up at what time. Look, I must say, I actually don't have the full list of like who's hiring what at the moment. But again, I would sort of recommend jumping on our LinkedIn page. But in the past, some of the companies that have been, really hiring quite a few people include Relectrify, which is a Melbourne-based battery technology company. Morse Micro, which is making sort of large range Wi-Fi chips. What else? AgriWeb has been hiring quite a lot. They are a software platform for farm management. JetCharge has been hiring quite a lot as well. They just did a recent round. I think probably just other kind of general observations about it would be to really follow the money, basically, because the way that these startups typically work is that they will do a fundraising round and then that enables them to kind of increase the team typically. So that can often be a really good signal that a particular startup is either raising or is likely to raise sometime soon.
Awesome. Thanks, Alex. Yeah, appreciate that. Angela's just popped by a question in the chat. She said, sorry if you've already mentioned this, I might have to step out for a second. Which Australian investors are open to or demonstrated funding for first-of-a-kind projects and technologies that you're aware of?
I think we sort of might have covered off on that. So perhaps if she's got a follow-up question, she can direct that through to me.
Yeah, awesome, cool. Does anyone else have any questions they want to ask Alex whilst we've got him here around sort of climate tech VC and investing and the like? No? Cool. Well, Cash, please just feel free to come off mute and ask a question.
Thanks, Alex, and thanks, Alex and Alex, both of you. Appreciate it. Alex, you mentioned just around activity with you guys, with your startups that you invest in, all that. There's things you guys post on the LinkedIn page. I've also come across Climate Salad recently. I'm just trying to learn more about the space. So, is there any other kind of forums or places where we can find out what you said about follow the money, like in terms of where these investments are happening, any news link you can subscribe to, etc.
Yeah. Okay. A great question. I guess when I was getting into the space, I went along to a few Climate Salad events. So definitely getting along to some events is super helpful. There are some good free newsletters that come out. Australian, probably the most relevant one would be Renew Economy, which I think typically focused on utility scale opportunity, but it does also report on when there are kind of capital raises in the renewable economy space. Other ones, Capital Brief, which that's a generalist publication, but it does talk about when there are larger fundraisers in the climate space. Internationally, probably the go-to one would be CTVC. They do a terrific job of basically doing a weekly roundup of different capital raises globally, and they obviously, as part of that, cover Australia. So I follow along on that one pretty closely.
Right, thank you.
I can definitely attest to all those resources. I actively monitor them, and CTVC are a super impressive outfit. I've been very inspired by what they pump out on a weekly basis, so definitely recommend subscribing to them. We have one more question if you've got just 1 more minute or so, Alex. Paul's just asked if there are any retail investment opportunities for climate tech for non-sophisticated investors that you're aware of.
That is a good question. Not really is the answer. Nothing that I can think of, which is, but I must say I haven't looked into it recently in a huge amount of detail, but it's always been a challenging thing, right, participate in those angel networks, you typically need to be a sort of a wholesale or sophisticated investor. And I'm not sure of anyone that's got a retail fund for this kind of thing.
Right. Okay. So even angel investors are a sophisticated investor, are they?
I'd say so. There's probably a difference. So the crowdsourced equity funding is open to anybody, and there are limits on how much you can invest in a given startup and over the course of the year. That's what provides the sort of the investor protections there. So that's probably actually the best answer to it, would be looking at some of those platforms and seeing the technologies that are coming through on those if you want to get access. But the kind of the more formal angel networks that are like Aussie Angels or Electrify Ventures that I mentioned before, I think they're typically focused on wholesale investors only.
Right. Okay. Cool. Awesome. I'm aware that Energy Lab takes some and has like an angel fund as well. I'm not quite sure what this.
Oh, that's right. Yeah, I should have mentioned
what
that.
the requirements are there, but might be worth checking out, Paul. And I think I've seen you at some Energy Lab events, Paul, so I'm sure you'll know your way around there. Awesome. Well, we are just over 2:30, so I don't want to take up too much more of your time, Alex. Thank you so much for the great session and overview, and sort of going deeper into sort of first of a kind. And I'll try and follow up with some resources that you shared by email to everyone. But yeah, thank you so much for your time, Alex, and look forward to seeing you again soon.
Yeah, thanks, Alex. What you do, community building, is an unheralded, but it's such an important role, and it takes courage and vision and energy. So thank you for everything that you do, and thanks for having me.
No worries. Absolute pleasure. Thanks, everyone. Have a great day.
Thank you.